So today we're going to start off with talking about the Federal Reserve. We're going to work on towards demystifying the Fed hype and what that really looks like versus the reality in real estate and how it correlates with the mortgage rates, and try to bring a much broader understanding to the entire process on how the Federal Reserve brings balance to the economy. And then that trickles down into all the other types of industries. So we're going to be talking about that. And I will pause for just a second. So the reason why I'm really wanting to hone in on this is we read headlines all the time that scream to us that, the Federal Reserve is cutting rates or hiking or slashing or, whatever adjective you want to use to describe what's going on there. And every time that kind of ad or that headline runs, it's always like it sends some kind of shockwave through all the news media sources. And, they either panic or they accelerate or they, misconstrue what that actually means. So today, the goal is really to kind of cut through that kind of noise and kind of really look into the depths of what the Fed actually is and how they control things and how that impacts the true bond market, right? Because that's ultimately what we're talking about here. And then that will help us to better understand what that means for everyday real estate operations and transactions, mortgage rates and banks and how they exchange money and all that kind of stuff.